Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, July 16th, 2023. Hope you guys are having a fantastic weekend, and let's get started. We saw the S&P, they really were trying to climb things higher on Friday, but once we started running into, some resistance areas, we did see sellers step in. So the S&P went from plus 20 down to down 4. And the reason why I'm showing you these, the older chart, well, the charts from stockcharts.com, this is just a channel that I've had in place. Here's the resistance areas. We made it pretty much right there. That's where sellers stepped in. So we're gonna just have to wait and see if they can have any kind of follow through on Monday. But let's take a look at the daily chart. I mean, and as we can see here, this is that resistance zone. Here's that the top of the bearish megaphone top here, and it's every time the bulls tried to break through it, we were just finding them having a very hard time keeping it going. On the right now, just from this chart, really the first support area is going to be right here, right around that 43.30 level. If the Bears can get through it, then we're looking at a test down at the or right around the 4,200. So it's going to be pretty important right in this area here for the Bears to get through. And as we can see, we have bearish divergences on it, this megaphone top, and then as far as the wave structure, as I've been showing you, this is your one. Here's your one, two, three. This is 4, and now we're 5. So seeing just a normal retracement, which we could just use on our regular charts here, you can see that just a 50% was as typical just for a pullback, brings us down to the 41.42. If it does a full complete retracement, 78% retracement, then we're looking at a move down to the 39.25. But as I said, until the Bears can push it through this 43.30 level, the bulls are going to continue to try higher and just build these divergences out. But once this area gets taken out, that's when you see that we get this really, really quick move down to the 4,200, and then we have the 41.33, which is a moving average. So these are kind of my downside targets that I have right here. If the bulls look higher, I mean, maybe they're going to try for 45.84. It doesn't really would make any sense to me just looking from let's say wave structures as well as patterns. I don't believe they have it up there. I'm surprised that it was a massive, massive short squeeze that they pulled here to get us to where we are. But they have to be running low on short fuel tower there. So if we take a look at the hourly chart here, again, bearish divergences are in place. We came into the resistance, sold off. So we have this gap right here. This is probably going to be really the first area that the Bears are going to have to try it for, and that's at the 44.70. But then we have this support right here at the 44.44. So those are the areas that the Bears need to get through. If they do that, then we're looking at a move down to the test the moving averages or this support at the 43.80, and then we start coming down here. So those are the support areas. You can see we have a ton of gaps here. So they're going to get filled. It's just a matter of which way they decide that they're going to come and fill them. But make no mistake, they will get filled before everything is said and done. And that's really about all I have. We have the sell signals on the daily as well as the 60-minute chart. Wave structure is looking like we're in some type of wave 5, and it's either going to be a wave 5 of a 3 or wave 5 of a 5. It's a wave 5 of a 5, then we're coming back down significantly. If it's just going to be a wave 4 within say the final wave 5, then we could see it, I mean, 150, 200 point move to the downside. But let's cross that bridge. Let's see what shows up on Monday morning. And with that, enjoy the rest of your weekend, and I'll talk to you guys in the morning.